Welcome to the Think Factory podcast. We got one question for you. What keeps you up at night?
I'm your host today, Chris Santamassimo. Really excited to talk this morning with Ryan Fox, who's with Bloomberg. He's a corrugated packaging market analyst and bringing us news right from the horse's mouth about the packaging market and all of the operators in it. Welcome to the podcast.
Thanks for having me, Chris.
I have to say that I'm flattered that someone from Bloomberg, such a great organization, would jump on our podcast. So thank you very much. When you and I got to meet each other, Ryan, I was really intrigued by what you've done, which was to go from being an operator in the packaging market, corrugated, I think in particular, and becoming sort of a news source through Bloomberg. So would love to dice that up and learn a little bit more about you and what you've done to create this vertical at Bloomberg.
Yeah. So what a wild ride. I stumbled into corrugated packaging in 2010. It was a complete accident. I had just graduated from NC State University with an MBA in innovation management. It was 2010, and if you remember 2010, we were on the backside of the great financial crisis. Hiring people was incredibly difficult. I had been looking for a job.
Well, getting hired maybe was the hard part, right?
Well, getting hired was the hard part. I had been looking for a job for about 10 months. My previous company, before I got into corrugated, I was selling fitness equipment, and they went bankrupt in September of 2009. So I was unemployed and finishing my degree and just kind of doing my best. Graduate, there's no prospects. I had good relationships with some of the kind of internships of sorts we do when you're a student, right? Mm-hmm. Good relationship with those companies. And they're like, Ryan, there are 20 internal applicants with 10 years of experience and all of them have MBAs. Like, you don't have a snowball's chance, bud. We like you, but good luck.
Yeah.
And it was a friend of a friend who said, hey, we're looking for a salesperson. You have sales experience. You have a business degree. Why don't you go for an interview? And I called the guy. We went for an interview and they took the gamble. And listen, they had nothing to lose at this point. They needed a salesperson. I needed a job. He offered me $30,000 a year salary plus commission.
Mm-hmm. Right.
Come on. There was nothing at risk there. And I just got after it I put all my heart and soul into it and I had a really good run. So for the next couple of years, I just continued to grow the book of business. And that attracted the attention of a local integrated. And so after about 5 years, I moved. I went to another company, and I didn't have the intention to just stay in the local market. I wanted to do something a little bit bigger. Everyone talks about climbing the corporate ladder. And it's really important to make sure that ladder is on the right building. So
that's for sure.
And that's what I had a great experience when I went there. I cannot say one negative thing. It was a great learning opportunity, but it wasn't the best fit for me. And by the time they gave me an opportunity to find new employment, that's my cheeky way of saying they fired me. I had learned so much. And so then I went to go work for one of my customers who was a distributor. So they bought and resold packaging. And I took all of these things that I had learned over the previous, 8 or 10 years, and I started to deploy them to become successful at a different scale, not a bigger scale, just a different scale. And then the pandemic hit. And it was right around that time that a headhunter from Bloomberg reached out and said, Ryan, we see that you have packaging experience. We see you have an MBA. We're looking for somebody with kind of those background items who might want to get into reporting. Do you have any interest? Well, it just so happens that yes, I was very interested, and yes, I had been leveraging the data that I had access to be a better operator in the industry. So in 2020, I started this franchise within Bloomberg. It's called the Green Markets Box Report, and it was slow going, Chris. The good news was during the pandemic, there were a lot of GMs and sales managers who couldn't go visit customers, and they were sitting at their desk. And as I started cold calling them, they started picking up. And so that's kind of the origin story of this thing. It took about 3 years before we hit critical mass and the snowball really started to get some steam. But here we are a little over 6 years later.
What drove Bloomberg to be so interested in the packaging market? I find that really intriguing.
Well, Mike started Bloomberg 45 years ago with this whole intent to bring transparency to markets. It didn't matter if it was a financial, just Wall Street stocks and stuff like that. We've done this across a lot of other industries. And believe it or not, you may know this, maybe you don't know this, but corrugated packaging, really all packaging, is pretty opaque. There's not a whole lot of industry data. There's no one really writing about the macroeconomics, the supply, the demand, the pricing, what's happening on a month-to-month basis. We now get in the industry data comes out quarterly, not monthly. So there's very little insight into what's happening. So if you're an investor, there are, 3 very big companies in the U.S. And if you count Cascades, you got another one. You've got people who want to invest in these companies. They do give good returns, usually pretty constant returns. They pay their dividends, and they want more information about it. And what we had currently at that time, it left people wanting a little bit more. And so that's really what was the catalyst for this. And so that's what drove Bloomberg to expand in that market.
So is it really conversations with executives and some of the behind the scenes information that you get that really put the fuel into the fire, so to speak, for what you do at Bloomberg?
Yes. There are about 1,100, give or take, corrugated box manufacturers of a variety of different sizes. If we think about the corrugated packaging industry, it's largely been looked at from the mill standpoint. And again, if we use big round numbers, there's about 90 paper mills. The majority of those are vertically integrated, and people really care what's happening at the mills. They don't really care about what happens through the 1,100 box plants. Some of those box plants, we call them full line box plants. They get the paper from the paper mill, they turn them into boxes. Other plants are called sheet feeders. They get paper from the mills, turn them into flat sheet, and they send those flat sheets to a sheet plant. So we have 3 kind of big category plants. We talk to all of the above, right? So we'll talk to the mills, we talk to the full line plants, we talk to the sheet feeders, we talk to the sheet plants, we talk to packaging distributors, we talk to tooling vendors, ink vendors, machine vendors, anybody and everybody, because it's a paint by number. Everyone's going to have a different perspective. And the important part is to get as much as you can every month from a variety of different positions across the country. Regionally, there are differences. There are hot parts of the country where the base, the underlying demand is growing at a faster rate than in other areas. And so by having more and more places that you can go to, you can get that granularity and you can see the market moving in different regions. So all of that said, yeah, we get as much as we can from as wide a net as we can to try to help inform the reader.
I mean, that's fascinating, and how you can put all that data together, because the sources are pretty disparate from one another, although they come together for that paint by numbers picture you talk about.
Well, that's the other side of this, is that every business is different. And so what we're able to ask people and get them to participate in a way that doesn't compromise their company, that's a very different kind of conversation. That's not something that's proprietary. It's if you and I were speaking, I'd say, Chris, how's the market feel right now? What is the demand? What does the temperature for demand feel like? Is it getting warmer? Is it getting colder? Is it up from last year, down from last year, up from earlier this year, down from earlier this year? Like, can you give me some directionality here? And most of the time people feel okay saying these things, right? Yeah, it's good. It's better. Okay, that's great. Like 4% better, 6 to 8% better. Can you put it down? Can you give me a range, kind of a little bit of a range to work with? Yeah, probably 4, 5, 6%, something like that. Okay, cool. And so what we do is we take those sentiments and we dump them into a spreadsheet. Well, last month we got to 170 different people across the U.S. and we dumped all of their sentiments into a chart. So you don't see one person's story. You're not going to see their name. You're not going to see their company. You're going to see an aggregate, kind of a histogram of responses where people are believing things are. And the fun part is this: sometimes they're going to give me a number like, oh man, we're up 15% year over year. Okay, now what do you mean? Like, tell me more about that. What does that mean? And sometimes it's organic growth. Sometimes it's they've got the right kind of customers. They're in a hotbed, people are moving to that area and they're just picking up stuff organically. In other cases, it's takeaway, right? They're taking market share. And so it's not a matter of underlying demand that's getting better. It's the fact that they are just beating their competitors.
They're beating them to market. Maybe they got that special product, like you say.
There's a number of different strategies right now and kind of in the go-to-market. The thing that is I think the capacity, the bottleneck for the industry is the human capital side. It's not about paper mills. I mean, that's important because if you don't have enough paper, that constrains things. But the bigger thing that the industry is facing right now is the people to make the stuff. And that manifests itself in things like the ability to get a box quickly, like lead times for boxes. Historically speaking, you go back before the pandemic, 5 to 7 day lead times were pretty normal. You might have some seasonal shifts where it got a little bit longer, or maybe you had some specifics like it was a kind of a high graphics item where it was a litho lam, so they would print an offset sheet, laminate it to corrugated, die cut it, then they got to glue it, and all of those different steps. It's more lead time. But now we're seeing a similar kind of manifestation where things are getting a little bit longer. It is a little bit because things are getting better, but it's also a little bit because we just don't have the people we used to.
And that's a challenge in a lot of industries where the blue collar, so to speak, or even the supervisory positions at manufacturing plants it's just hard to find the right people. Have you seen a shift to some extent in technology where some of the operators can take advantage of technology and automation in order to minimize their reliance on the labor?
Yeah, but that comes at a cost. The capital expenditures, right? Yeah, like literally the capital expenditures required to scale up to that automation. It's intense. Let me back up a little bit. So if we talk about a sheet plant, sheet plants are typically small volume, high customization, high margin relative to some of the other stuff. An average order at some sheet plants could be 500 pieces or 1,000 pieces. These things turn over very, very quickly. And in some sheet plants, like the ones that I worked in, it's all manual. You've got two people on the back end of a press who are grabbing sheets and sliding them into the press, and they're just feeding this thing all day long. Well, that's not always the case anymore. And when you don't have the people, you have to buy a pre-feeder. The pre-feeders are great for high volume work. They're not as great in a sheet plant, but when you don't have the people, you got to do what you got to do. The pre-feeders cost money. They also are a little bit more cumbersome. They can also kind of create a little bit more length in order changeovers and setup times. And so it's a kind of a blessing and a curse at times, right? So you kind of want it and need it because you need the automation, you need the help because of the people problem, but it also comes with a high cost, and it does create some new hurdles that you may not have had before.
Take it a step further. Do you see a lot of robotics being implemented at some of these plants?
Yeah, the brand new plants or when companies are going to go through this kind of a transformation, everything's automated. A great example of this, Pratt Industries, one of my alma maters, they're an incredible company, but they have invested so much money. And their Cedar Hill, Texas is a great case in point. They've been very prolific on LinkedIn with the automation that plant has. I mean, everything. The sheets come off the corrugator. They get moved through the plant with an automated conveyor system. They go to the machine. Everything's automated. They come off the machine. A robotic stacker does all the work. It gets to the end of the line, and an automated forklift picks it up. Wow. Right? And there are lots of things like this where more and more box plants are automating as much as they possibly can. I mean, 5 years ago, it would not be like out of the realm of normal to see 100 people on the production floor of a high volume box plant. And now you've got some plants where that same footage is being done by 30 people because of the automation.
Have you seen people sort of retire out of or leave the industry where these things are happening? Yeah.
Well, that we actually saw a huge kind of the great resignation of 2021. I see it in the data. Even though demand was still surging in 2021, we had so many people leave kind of second quarter, third quarter of 2021. The data showed that the shipments couldn't keep up with the demand. For forever, the shipment data was the demand number.
Right.
And in that time, that's not what it was. Demand was so far above our ability to produce it that we started to see this gap form. We'd never seen that before, or at least not in kind of recorded history. And what our data showed was box lead times kept growing and growing and growing and growing, even while shipments were coming down, as evidenced by the fact that there was this great resignation, people who left with 20 and 30 years experience, and you just can't replace that. Right. All of that tribal knowledge, the subtle nuances of flexographic printing, poof, gone.
Yeah, and automation doesn't pick up the baton in a day. It's sometimes years.
That's very true. And automation, again, automation does the simple. It doesn't always do the thinking. It doesn't always do the, hey, the print here, we need to adjust the analogs on the press. It's too hard, or it's too light. It's the pH of the ink is wrong, and we're having some problem with colors. The automation doesn't always do that. Now, some of the systems are becoming a little bit better now, but again, at what price?
You mentioned the pandemic, and I guess I'm intrigued or surprised that we still talk about it so much, so many years later after it sort of concluded. But in your work for Bloomberg, do you consider the pandemic, at least as it applies to the corrugated market, to be sort of a big pivot point? And we think about before COVID and after COVID in terms of the data, or have we normalized where maybe it's just a little bit of a blip in your data?
Well, it's definitely a blip, and there definitely is a pivot point as well. That's a really great question. What we saw, I mean, it truly was maybe a once in a lifetime event, right? We saw lockdowns where the average American couldn't go and do the things that they normally did. You couldn't necessarily go to the movies. You couldn't go to games. We had government stimulus. And what we saw was a large group of Americans that had excess money that they didn't know what to do with. And so what did we do? We bought a lot of stuff online. We kickstarted the whole Uber Eats and DoorDash, and I mean that just exploded. What else happened there? We did a lot of renovations. We bought a lot of furniture. We bought a lot of the durable stuff that you just, again, they might be once in a lifetime purchases. We spent a lot of money, and you got to think that pulled forward demand that was going to happen eventually. And
but not at that rate. It
but
didn't,
not at that
explode,
rate. Yeah. And we don't have a great way to think about it. I mean, that, like, I've tried for the last 5 years to try to understand like how much the pandemic pulled forward. We have no idea. Like, our best guesses still fall short. But what we have seen is it a pivot point? Yes, it's a pivot point. There's also a very kind of clear defining moment, because after the pandemic, people have been making different decisions. Immediately after the pandemic, Taylor Swift went back on tour, and you see people, doing the whole Eras tour and spending thousands of dollars to go to the Eras tour. I have 2 girls, so this resonates.
Yeah.
And there was this push for experiences, whether it was Taylor Swift or something else. People began spending their money differently, and it was less on goods. And guess what? Taylor Swift concerts don't come in boxes.
Nah.
So that's the other side of this, is on the backside of the pandemic, we've seen a retraction of demand where things are normalizing. And at the same time, you see other things like the GLP-1 drugs, the Wegovy and Zepbound, and all of those things that people are taking. And that, again, alters the way they spend money. We see things like in e-commerce, there's a push for a more sustainable option, which is away from boxes into paper mailers. Okay, well, that's going to cut into box demand as well. Like, there are a number of things that are kind of showing up now that are a little bit different.
So if we think about, post-pandemic for a minute, and the corrections, normalizations, how would you characterize the market today as compared to, say, 2021, 2022? Are you seeing leveling off? Or are you seeing a bit of an increase, or what else?
Well, last year was a very flat year as far as demand went. And this year, we think it's going to look somewhat similar, maybe a little bit on the downside. We've had some kind of shocks to the system, not just with the pandemic, but last year, tariffs created a lot of uncertainty. And you think, well, wait a second, you're a U.S. manufacturer of fill in the blank. Why would tariffs have anything to do with you? Well, it's not always the tariff itself. Sometimes it was. Sometimes you're buying parts from another country, but sometimes the product you're making, you're selling into those other countries, and sometimes those tariff creates trade disruptions. And we did see that. We saw a lot of that last year. We saw a lot of uncertainty. We saw a lot of pullback. And it started into this year, and it seems like right now that things are getting a little bit better. The ISM, the PMI data has been in expansion. Like we're seeing that manufacturing is turning things around. But it's understanding and decoding what those single signals are. That's the trick, right? And I don't know that we fully understand it. I don't know if it's a restocking level thing where all of the uncertainty last year, as well as a consumer that was increasingly pulling back on their spending. The way I think about it right now is it's kind of like a bathtub where the drain is the consumer and they're draining water out of the bathtub, and the spigot is the manufacturers who are pouring into the bathtub, and the water level in the bathtub is kind of like the inventory, broadly speaking, across everything. And at some point they decided to slow the trickle of the spigot into the bathtub because the trickle out of the bathtub was slower. And so they had to kind of manage how much are we putting in and how much do we let that inventory fall down. And I think, I mean, again, I don't know if this is the right way to think about it, but this is how I'm thinking about it right now. I think what we found is that the water level in the tub got to a point where now they had to add more, right? So is it a real turnaround in demand, or is it a restocking, replenishing that we're not going to know for a while? But I think that's one way to read it.
During the pandemic, for sure, lots of manufacturers would hoard their raw materials. Certainly corrugated board, and once the pandemic, sort of dissipated and normalization started to happen, you found a lot of companies that were overstocked, frankly, which depressed prices and hurt a lot of people. When you talk about uncertainty with tariffs and some of the other global events that are going on, do you see that kind of panic behavior anymore, or have people sort of gotten a little calloused to some of these blips?
The wild card, Chris, is the high cost of capital, right? So interest rates are pretty high, and putting out a lot of money to fill your warehouse to avoid some higher prices, that comes at its own very high price. So we're seeing less of it. I'm not going to say it's not happening. I'm just saying I think there's less happening today. The people that are taking advantage are the people who are set up to do something like that. So this might be a packaging distributor whose business is to buy in mass quantity at low prices and sell it at smaller quantities at higher prices. They might be taking advantage of some of that stock up because that's their business model.
Right.
But even that has some limits, right? They are constrained by how much warehouse they have and how much capital they want to tie up, and for how long they want to tie it up.
Makes sense, for sure. What are some of the other trends that you see in the market today, in 2026 and leading up to 27?
From a trend standpoint, there is a lot of talk about extended producer responsibility laws. And that's creating a lot of uncertainty. It's also creating a lot of, I'll say, hoops to jump through. There are 7 states that have passed the laws. Not all of them have them like fully implemented, and each state is a little bit different. But the biggest problem right now is it's not so much the laws themselves, it's all of the red tape and the administrative load that comes with it. Because every state's different, and every state has kind of a different implementation time and different fee structures. And I think the biggest problem is like a data standpoint. Like, they're going to have to tell each state how much of their commodities for packaging they shipped into the state. That's a daunting task,
right? That
I don't know many people are prepared for. So that is certainly something that's become a more prevalent topic. I can tell you there are a whole lot of people that are ready for it.
Well, the primary responsibility falls on the brand owner too, or at least in the first instance. But I would expect that responsibility trickles down to the box suppliers and others to be able to provide the data that you talk about in order for them to report.
And this is where the complexity comes in. So imagine you're a very large company like a General Mills or a Mondelez or Tyson or fill in the blank, right? Big company, you're using a lot of packaging products. You may have a variety of different suppliers across all of your different states. Not everybody makes boxes the same way.
Right.
Like the formulas aren't consistent always. They're probably very close, but it's not an always. And when we think about things like 32 ECT, which is the commodity grade of corrugated box, you can make that a dozen different ways.
And the weights are all different, right?
The weights are all different.
Right.
And so you might have one company who is having an inventory problem and they're making it from a 35-pound liner and 26-pound medium. And then you may have another company who they're structured completely different. Like everything's different. They have great paper, it's strong, it's lightweight, and they're using a 26-pound liner and a 26-pound medium. It's still 32 ECT and there's a 12% difference in weight.
Right.
Well, that's going to show up. I mean, 12%, if all of these EPR fees are levied by weight, 12% could be massive, right? And so these are some of the things that are starting to surface, having that consistency, having that relationship with your vendors where they can say, hey, okay, well, we made this order and we didn't have the right inventory and this is what it was made from. And so how do you average that out through the year? Again, this is where talking with every state, these things become increasingly more complex. Do you just take an average of all of the stuff that you consumed and you pay it on the average?
Well, I find it crazy too to think about, just as an example, you sold corrugated packaging to a computer manufacturer. They box up the computers and they ship them to California to a warehouse or a distributor's warehouse. Who knows where those computers are going to go? But they've arrived in California, but they might go to Utah, they might go to Idaho, they might go to Arizona. States that don't have an EPR law. So how do you and this is a rhetorical question, but how does somebody like that determine what to report? Because if you reported the entire truckload that showed up at the California warehouse, you'd probably be over reporting. If you reported nothing, you'd be maybe under reporting.
That again is the complexity of what is being asked of some of these producers.
Right. It's sort of
and there's probably a very simple answer to it that I'm just not aware of quite yet, but yeah, these are some of the complexities.
Is that a drag on the industry, do you think? Just because of the data collection responsibilities and the cost of it?
I don't know that it's a drag quite yet. Is it a nuisance? Yes. The positive for the industry is that in most states, paper has a lower fee structure because everyone knows how to recycle it. Plastics kind of get the short end of the stick here. They're increasingly more complex to recycle. Not everybody recycles everything. You can't really recycle film plastic like you would a more rigid container like your number 1 PETs and number 5 polypropylenes and things like that. So every different plastic kind of has its own rate too. And so we're seeing this paperization effect. We talked about the Amazon paper mailers. Well, there's a reason why they're paper and not plastic.
Right. For that reason.
Partly for that reason.
And not corrugated in some cases too, as you
Correct.
said. More and more you do see those heavy-duty paper mailers.
In Amazon's case too, there's kind of this other potential reason, and it's for distribution density, right? So a box, if you're shipping your widget and your widget is this big and your box is that big, you've got all this air in there and it's dead space. But if you put it in a bag, the bag kind of takes its most dense form if you were to dump it into a larger container. And sometimes in the distribution of that stuff, what they if it's going to this zip code, everything's getting dumped into a big kind of bulk bin, and it gets a nice dense pack in there. And that's the advantage of having the flexible.
Right. Plus lower fuel costs and all of those trickle down effects.
Absolutely. Right? Yeah.
Yep. And we talked a little bit about the modernization and automation in plants. Again, when you factor in the cost of capital, you factor in, still the tariffs could be an issue. I think will continue to be an issue. A lot of the equipment that operators use is not manufactured here, after all. So, do you see that? Do you see an increase in the push for automation and technology implementation, or is that flat as well?
No, I think the future is going to be highly automated.
Mm-hmm.
If we're very honest, the president can say a lot of things about making America great and wanted to bring back manufacturing. I think it's a wonderful goal. But if you look at the data, we still have over 400,000 open jobs in manufacturing. Even in corrugated, there's a free job board, corrugated. I think it's corrugated-jobboard.com, something like that. And there are hundreds of open jobs in the corrugated market. Everything from forklift drivers to press operators to salespeople to name it. Right? It's all needed. The reality is, manufacturing is not a sexy industry. Everyone wants to be a TikTok influencer or a doctor or a lawyer, or the ones that make $1 million a year. And the reality is, you could actually get into corrugated with your high school degree or less if you can show up every day, you can read a tape measure, and just do your best. I mean, there are parts of this country where you can walk in the door and start at $22 an hour. That's not bad.
With only a high school diploma, as you say.
That's what I'm saying. It's like there were, if you think about that great resignation that happened in 2021, we had people who resigned that had spent 20 and 30 and 40 years in the industry. This is what they did. And they didn't make $15 an hour. Like, these were some of the greats. These were the legends. These were the guys who carried box plants for decades. So they weren't making 15, $20 an hour. These guys may have been making $30 or $35 an hour, and may have been getting it overtime too. These guys could have making $80,000 a year making stupid boxes, right? I mean, and I think there's a kind of a bit of that, again, in today's society, we're not doing a great job courting the next generation to come in. We really need to do more of that. We really need to see a push for people in manufacturing across all of the industries. But if we don't get more people, it's going to have to get highly automated. If it's going to get highly automated, prices are going to have to go up to help pay for it, or the number of competitors is going to have to go down.
Yeah, and that creates that divide between the haves and the have-nots, right?
Correct.
I see that a lot in the printing world too, outside of corrugated, where that, at least in my experience, that divide between the companies that are kicking, they're busy, they're doing, and they're profitable, really profitable, and those that are struggling, that gap seems to be widening a little bit.
And in the print world, that's 100% what we're seeing as well. I mean, corrugated has its own little specialty print that we've seen this emergence of full speed, 1,000 feet per minute, 750 DPI digital print, like at 110 inches wide. This is a game changer. What you can do with that technology, I don't think we have really cracked the code on that. You look at offset printing, and for folding cartons and other kinds of printing, we've got digital printing there. I don't know how well the Landa is going to survive or whatever, but now there's even a digital mindset in analog printing. You see, like the Koenig Bauer Rapida, it's essentially a 7-color CMYK extended gamut. Instead of having a 3-hour make ready because you're changing inks and all of this, you've already got the inks. It's 10 minutes. It's revolutionizing.
Or AGFA released the Orca. A phenomenal machine, and water-based ink, no less.
Yeah. So there's a number of different kind of iterations of how innovation is kind of showing up in the industry, what it can do, why it's showing up now, is important. 20, 30 years ago, if make readies were 3 hours, it was what it was. You don't have that luxury anymore.
Right.
Yeah,
and you need to change, finish a job and get to the next one almost immediately, just to stay competitive and keep the factory running, right? Absolutely.
Uptime is a very important thing. And if you're just doing a 3-hour make ready, no, that machine's sitting for 3 hours and not making you money. That is gone.
Yeah. It's just
this is the digital print, especially on the corrugated side, has taken off so much, is because you're not worrying about the pH and viscosity of an old analog system. What you see is what you get. There's the item on the screen, print, just like your home desk, desk jet here on your stand does the same thing.
And you're seeing more. Are you seeing, like we're seeing, more and more producers are ready to make the switch from offset to digital because the prices have sort of almost equalized in some cases, the speeds are better, etc.
Yes. Broadly speaking, listen, digital still is in its infancy, right? It's digital printing has been around for many years. but really it took off in about 2015 for corrugated. And we started to see single pass sheet fed machines about a little over 10 years ago. And then we started getting the web press single pass. And now you've got two different manufacturers who can, again, 600 to 750 DPI at 1,000 lineal feet a minute, up to 110 inches wide. That is unheard of. And we just wrote about this a few months ago. The Royal Group TRG is installing a BHS or has installed a BHS corrugator that has a digital print module that kind of comes with it. And it has the ability, if they wanted to do it, they could actually kind of put this in line so that they're printing boxes on the corrugator and not downstream. And again, when you start
an entire bunch of steps in the process, right?
100%. And so when you start to think about like the capital requirements downstream from that, if this is the mentality you're going to take, when you go to buy a press, of whether it's a die cutter or flexo folder gluer, you don't necessarily have to have an 8-color machine anymore. Right. You can have one with no colors if you wanted, because everything's going to show up printed.
It's crazy, right?
Kind of a comeback to the EPR, because of the digital print capabilities, they can print a QR code on every sheet that becomes a box. Embedded in that QR code is all of the data around that run, the basis weights of the paper, who made the paper, where did the paper come from, who were the operators on the corrugator that day. I mean, everything involved in that would be embedded into that. And so again, just from a technology standpoint, from a changing kind of culture and what the needs are of the industry, these are some of the things that are showing up. And, over the next 10 years, they will become more and more normal.
Well, we're getting kind of to the end of our time this morning, Ryan. If you had to sort of sum up what you've seen and what you're seeing today in the market, what would your messaging be to the operators in the market?
Oh, gosh. Okay, I'm going to put on my futurist hat for a minute. In the life of corrugated packaging, there was an era where paper was made a specific way. We called it a mullen grade, so 200-pound mullen or 350 mullen, or it was a way to measure the performance of a box, and that was a dominant for decades. In fact, the industry still follows a 42-pound kraft linerboard for that very reason, because decades ago the commodity grade was 200-pound mullen. 200-pound mullen required 84 pounds of liner facings. Well, 42 on the inside, 42 on the outside is 84. And so that is kind of the basis of why we follow that, right? But in 1990, the industry adopted edge crush testing as a new performance standard. And so we've seen 1990 to present, and I think probably by 2030, we may see the emergence of another iteration of box performance, one that has EPR in mind, but it also highlights the producer's ability to make a great quality box that's lightweight and sturdy, and it will become a new equalizer. What do we call that? I don't know. but
the
I
pieces
think
are sort of coming together.
They are starting to come together and form in such a way that now, again, if EPR is going to stick and the fees are levied by weight, then something is going to have to change. And it's no longer just going to be about basis weights. It's no longer going to be merely about box compression. It's going to take a new form, and we may still use the old language. There was a while in the computer industry where we talked about like RAM and processor speeds. We don't talk about that anymore. There's different language to talk about performance. It's kind of similar to that. It's still the same old thing. There's still stuff happening behind the scenes that's new and different, but how we talk about it is probably going to show up a little bit different than it has. And what's going to happen is the people that are willing to pay good humans to interact with this stuff and to do the quality measures and to make sure that everything looks great and performs well, like that's going to be a differentiator. And again, it's just, there are all of these chess pieces coming together, all of these things that are starting to form this new picture. And I think 2030 is an interesting frame just because of the 40-year gaps here. Like I'll take 1950 to 1990 for Mullen, 1990 to 2030 for ECT, and then 2030 on for this next thing. And it is going to be this incredibly automated, but also incredibly human iteration of the industry. Like there's going to be I think there's going to be a resurgence of what you and I bring to the table as humans, not just, that we've got all the KPIs and we, Salesforce this and, no, there's a renaissance of sorts coming.
Based on what you do, Ryan, I have the feeling you'll be one of the first folks to figure it out because you're
I appreciate that nod of confidence, but
hopefully your bosses are listening to this. So.
I don't know. They're like, what was he drinking in his coffee this morning?
Well, Ryan, thank you for a fantastic discussion. I have a feeling we could talk all day, and you wouldn't run out of really insightful information. So thank you so much.
My pleasure, Chris. Thanks for having me.
And this has been Ryan Fox, who's the Corrugated Packaging Market Analyst for Bloomberg, with a great discussion about the corrugated packaging market and great insights. And I'm Chris Santomassimo, today's host of the Think Factory podcast. We'll see you next time.